Good morning, everyone. Welcome to the Stock Market Morning Prep video for Monday, March 31st. Last day of the month, last day of the quarter. Watch the mutual fund inflows coming in today. We should have a decent morning, I would imagine, at least to start. We did get some follow through, at least some buying in the pre-market session. We're up about 5.5 handles now. Dow Jones finished the day on Friday up 58 points, S&P up 8.5, and the Nasdaq up just under 4.5 points. So had a little bit of buying on Friday, a little relief of the selling pressure that we've been having. And a lot of choppiness, I'll tell you guys, absolutely horrible price action in the last couple of weeks, at least pretty much most of March. So I'm looking forward to getting into April. I do think that we have a lot of event risks that are happening this week. We have the ECB rate decision. We did have some Eurozone inflationary numbers that come out. We have non-farm payrolls that come out on Friday. That's going to be really important, as we all know, first Friday of every month. So we'll be looking to see for any type of clues, Janet Yellen speaking. So there's a lot of stuff that could really trump the charts here. We have to be real careful about it. However, it's good to get the month behind us, and let's get started with April. Now, nothing really has changed. I'm going to go through a couple of indicators, but as you can see, the McClellan oscillator technically is still making lower lows and lower highs. It is a bearish pattern. So if we do get a big drop down, we still have plenty of room to run to the downside before we really get oversold in our reading in the McClellan oscillator. So anywhere around 70 or lower, you look for that snapback rally, which we had something like here in early February. But again, still has plenty of room to run before we can become oversold in any type of capacity here in the McClellan oscillator. VIX kind of doing its own here, but what's happening, as you can see, the Bollinger Band is now coming into play, starting to pinch. We do have some positive divergence here in price, so you got to watch, because if the VIX starts to break out, that's going to put additional pressure on equity. So VIX is something, key barometer that I'll be looking for in the coming days. Now, I mentioned a lot about energy, and I've liked the energy sector a lot, and I wanted to show you the bullish percent energy. We did have this, obviously, this up and down curling effect, and now we're starting to break. We got the signal on Friday. Crude oil is down about 20 cents at the moment, but looking pretty constructive to the upside here. We did make that higher low from this previous low. So if we can get a little bit of a chop back and forth, I'd like to see crude break higher, and I'll show that to you too as well. But it's just interesting to see what happens here in the bullish percent. Now let's run into the U.S. equities, the E-mini S&P future contract. We're up about 5.5 handles, so that looks pretty good for at least the start of the opening. But what's happened is that sellers come in and start really hammering the market right on the opening, or they let it drift a little higher and then they start selling again. So we are still in this area. You can see all of the moving averages are now flatlined. We did alleviate some of that overbought reading in our momentum indicator, so now it has flatlined as well. Volume is average, so now we really need to see a breakout or a breakdown from this area. Now I still have the 1272 extension and the 1618 retracement as two upside targets if in fact we start to break high. Now we did hit the targets, obviously, and now it's capping that area. So usually when you get price into this area and can't break out, for a few times we usually get that drift lower. So we'll just see, take it one step at a time. You know, that 1834, which would be that 200, that's going to play a big role of support here, as well as this uptrend line from that November 2012 lows. So just keep an eye on what's happening here in the ES. Now, if I break it down to the hourly, as you know, we do have this head and shoulders pattern here on the hourly chart, measured down to 1817. Still valid, but we don't want to get too far away here now that we just kind of chop it around, and then it's just basically a horizontal trend line channel here. So that's something that we're going to be continuing to monitor as well. Right now, we still have it as a head and shoulders, but if we continue to just go chop around sideways, we're just going to alleviate that and then call it just a horizontal trend line channel, and then we're going to need to break above it or below it. 1272 still up there, remains intact. 1877 would be again the first target, and then of course we would just reevaluate it. 1618 will come in around about 1917, and at this moment I would not put anything aside that we can't make that target. Obviously, markets are crazy right now. It could do whatever it wants to do. So just keep an eye on that for now. And then I want to go into some of the indexes. Really, most importantly, I want to see what's happening. Look at the Dow Jones Transportation Index. Now, we have this area of resistance, as you can see, clearly capped at 1, 2, 3. About 6, 7 times it hit it and can't break through it. Now we're sitting below it. And we're basically at the 50-day moving average. So a break below this is going to send the market at least back down to this pivotal low, and then of course this pivotal low as well, which would be that main area here. Now, I'm not saying it's going to get there, but we need to see the transport, which is our leader, really start to move up and start breaking out of this area. If it does not, I think that the transports will be one of the few that will cap this market lower. Now, I just want to show you the IWM, which is the ETF for the Russell 2000, and look what it's doing. It is below the 8, the 34, the 20, the 34 to 50, and this is not a good sign when you have our leaders starting to break down here. So I'd like to see this have to really, this thing needs to get back up above, price needs to get back above rather quickly, above 116.70, 117. Really, ideally, it would be 117, but this does not look good that the Russell, good gauge of risk on, risk off, is now breaking down. And to be quite honest, the next spot is going to be 111, and then of course the February lows, and we definitely don't want to see that happen. And then you're going to have a major shift in sentiment and trend. So the Russell not looking too good as well. Look at the diamonds, you can see as the ETF. Now it's holding its own here. I mean, it's no question about it holding its own, and it's above most of its moving average. But again, you want to see price starting to move to the upside, and it has not done so. So I think you need to really pay attention. This is one of the laggards, so it's not a great deal, but it's definitely highly watched as well. Take a look at the Qs, and as you can see here, very similar pattern to the Russell. It is breaking down. So you have three leaders really starting to falter and start to break down as well. And then you have obviously the S&P and the diamonds, the Dow Jones kind of holding its own. So it's going to be really interesting. We're going to need some sort of a catalyst to either bring this market lower and or reverse this short-term downtrend that we had of lower lows and lower highs and moving the markets back up again. So just keep an eye on that. Lastly is what I want to show you is sector is the oil sector. Now, what I've been looking at is crude oil, and as you can see here, crude oil had a nice consolidation. We broke back up, and now we're back above this 50-day moving. The 50% of the Fibonacci retracement. Now, I'd like to see this back and fill a little bit more at the upper end of the range here. Maybe get into around 100 and hold 100, and then really start to accelerate to the upside, because you really have upside targets are going to be at least as high here at 104 and change, and possibly 108-ish area right around here. So let's keep an eye on it. Now, why am I interested in it? Well, you have some of the oil services. Let's go to the ETF, the OIH, starting to break out here. And we had a little bit of a breakout of this area. As you can see here, we broke out, and now we're moving higher and challenging these highs. So in that sector, we have Schlumberger, and as you can see, that made new highs. We have Halliburton, HAL. It had made new highs, now challenging it again. And then, of course, Baker Hughes, BHI, making new highs. When stocks in the sector, commodity related, such in this case oil, when the stocks start to move, there's an anticipation of oil moving higher. So if that's the case and we couldn't get any of this, we can start looking for a crude oil play. Okay. Some of the other stocks, CVX, looking to break out again. ExxonMobil, one of the leaders here, is now breaking out of this range. So, next pullback in this area, you could look to buy some. Now, even alternative energy starting to move a little bit. You have the dirty coal play we were talking about. Now, obviously, it's been getting beaten down and battered, so it's going to take a little more doing for it to move higher. But you have that, the CNX, which is another coal sector, obviously much better. You could see that had a big reversal on Friday, but again, holding up relatively well. And then look at the solars. The solars have just literally have gotten crushed. But, TSL, maybe that might be a bottom play in the coming days and weeks. I am not saying to go out and buy solars at the moment, but it does need a little bit more work. But if you look at something like one of the leaders, First Solar, holding up really well in this down market. So just Solar City, excuse me, SCTY. It has broken down now. Really, these stocks have gotten battered except for solar. So if oil goes, I believe some of these alternative energy plays will follow as well. Okay, so keep a tight stop out there, guys. Let's see what happens. We do have end of month flows coming in today. That should bode well for at least a continued push to the upside, and then we would reevaluate it. I do think that the markets are in trouble, and I do think that we should see lower prices. Now, again, news trumps the charts, so just pay attention to what's going on around you, and definitely print out your economic calendar, because there's a lot of data coming out around the world this week that will affect U.S. equities. Have a great day, and we shall speak to you tomorrow. Take care, everybody.